Friday, May 9th, and I got a big show set for you. We're going to do screens. We're going to find some stocks that have up in the last month, still under their 50-day in the S&P, maybe have some good earnings, maybe have some good growth, maybe opportunities. We're going to look at several stocks that are up year to date more than 100%. We'll look at NVDA and the mega cap tech, of course. We will look at Bitcoin. We will look at the earnings yesterday, a stock that, and then we're going to look at SOXX versus IGV, which is software versus semiconductors. So it's a big show. One stock that I found, I'll take you through how I found it. But yeah, let's get started with Liberation Strategy. I got a bunch of emails yesterday. Everybody wants the Liberation Day strategy. When's it going to get us back in? If you wind up staying above a moving average today, one of the moving averages, again, it's in TRENDSPIDER, so you can import it into your TRENDSPIDER setup. It's going to trigger us next week. Remember, it's on a weekly candle, so patience. It won't trigger you on a Friday. It's going to trigger you on a weekly candle, and it's going to be next week's candle. Just, again, we have to wait the weekend. We don't know what's going to happen in Switzerland, but we know, hey, more than likely this is going to get you back in. So should you get back in? Well, that's up to your own opinion. But if you want the Liberation Day strategy, you can see right down here for QQQ, it makes you 302% versus 322%. And you win 64% of the time over the last 9 years. 9 years. So it's not like a 2-month or a 3-month back test. 9 freaking years. What does that take you back to? It takes you back past COVID. It takes you back past the 2022 downturn when the Fed was raising rates. It takes you back to before the first Trump tariff warnings. It takes you back that entire way. And you can see all the entries and exits right here. It is a back-tested strategy that has proven its worth. And it's in TRENDSPIDER. So if you'd like this, go to my link tree. The link tree is down below. The top link right here, it is TRENDSPIDER. Okay? If you sign up for an annual plan, you can try it out this weekend. 2 weeks, $20. 2 weeks, $20. Go and try it out. I will send you the Liberation Day strategy. You can import it. I will include it in the newsletter today. Import it and play with it this weekend. Understand it. Then you'll get it on Monday. Oh, and you can set an alert. If it sends you an alert to buy, maybe that's something you want to take into consideration. But again, for $20, you can get a 14-day trial. See if it's something that you want to use. But yes, everybody was emailing me yesterday. How do I get it? How do I get it? It's here in the newsletter. And the newsletter is down on Linktree right here. And you can just type in the newsletter, Liberation Day. Search the Daily Stock Pick newsletter for Liberation Day. And it'll find it. Liberation Day. Right there. Liberation Day close. Right there. It's all in one of those. Okay? So you can find it, you can import it, you can do whatever you want, but it's in many of the newsletters. Now, we can go to the 4-hour algorithm, and the 4-hour algorithm comes when you sign up for a annual plan in TRENDSPIDER, and it is in there. And you can look, 45% performance over the last 24 months. Again, I like to, because it's a 4-hour, I'm not going to test for years and years and years. It is 2 years. 24 months, 21 positions, you win 48% of the time. So you win 10 out of 21 times. Not bad. Not bad at all. Got you in at 458. You're at 488 right now. In pre-market, you are at 489. So you're up about 0.31%. Again, it's a Friday. MACD is rather high. RSI is high. We'll go over everything like that. But I do want to go over to SPY. And the reason that I want to go over to SPY is, again, the 4-hour algorithm outperforms buy and hold. And you can see this 589 right there. That is the, I believe that is the 567 is when that's Liberation Day. And we've made it back there. Because you're trading right now in SPY and pre-market, it's 566. We've made it back there. We've made it back to Liberation Day. And again, if you played the 4-hour algorithm over the last over the last 2 years, you've won 55% of the time, 20 positions. So you win 12, you lose 8, you lose 8. I think that's 55. I don't know, maybe 11. Who knows? But again, the performance, 38% versus 36.6%. Now, I want to point something out because yesterday there was an Investing Experts podcast. I've been on this podcast, okay? I know how Rena does it, and it's a shocking number. Sanjeev Sharma, he returns to explain his methodology and share his S&P forecast for 2025. That's this year. Just so you know, 7,000 is his target. That would correlate to 700 on SPY. So let's just shrink this down, and we're going to try and see exactly where 700 would take us. What's the percentage from here? So you just take the Liberation Day strategy and you say, okay, we're going to go up to 700 because I can't do freaking math in my head. That is a 23% upside from where you are today. Not even the bottom. From where you are today. You can get the Seeking Alpha Investing Experts podcast on all the major podcast platforms. I would suggest and go and listen to it. Okay, it's not that long. It's 15 freaking minutes. He explains how he gets there. So he explains how he gets there. And again, he's on the Investing Experts podcast. I was a guest on there. It's good. Now, what's driving us up there? Well, earnings are turning out to be really, really good. Biggest movers of the day, Pinterest, 14%. Cloudflare, which I said yesterday, I love. I haven't gotten into it. I missed it. I will wait 3 days and see if there's another opportunity. Lyft, shares gained after the company reported a 14% year-over-year rise in revenue. Affirm lost it. I like to trade this one. Buy now, pay later declined after CEO Max Levin acknowledged the company's 0% APR installment loans generate lower revenue than other products, though the stronger credit quality offsets the margin trade-off. He also flagged potential macro risk, blah, blah, blah. I'm not a big fan of buy now, pay later. This is a stock that I've traded in the past. I like it. I have it on watch list. I think you can trade it for good things. Now, one of the other strategies that I suggested is to set up alerts when this douchebag tells you when to buy the stock market. And when I say the douchebag, I mean he literally is the douche that you should listen to on the internet. Because he had told you during that one day in April, but it's a good time to buy stock. He said yesterday it's a good time to buy stocks. So if you bought it, you wound up positive yesterday. But I will tell you, don't get too comfortable. Because when you look at this chart, okay, back here, it's funny how this works. If you were to buy at extreme fear, okay, Warren Buffett always says, be fearful when others are greedy, be greedy when others are fearful. Buying at the dip when it was extreme fear at 4 didn't time the bottom, but you've quickly moved up in greed. So do you want to buy today? It's a Friday. I don't think we want to buy. I think you want to just hold until Monday. If you want to listen to Trump, so you got your, good devil, bad devil on your right shoulder and left shoulder. Trump says buy stocks because there is a meeting this weekend in Sweden, Switzerland, one of those S countries with Besson and the Chinese. Maybe things come out of that. Maybe he tweeted this morning that maybe a lower tariff rate than 140% is good. Maybe something happens. Maybe you want to buy on a Friday, but then the bad devil. Maybe nothing happens. And if nothing happens, why are you buying on a Friday? So time frame does matter. I do think that you can do that. But again, just be careful about what you're buying. I wouldn't necessarily buy a huge a volatile stock today. I might buy some QQQ and some VOO and things of that sort for longer term investors. Now, I was lying in bed this morning and we had a sell in Alpha Picks yesterday. So I sold it yesterday. It got me thinking, what about the closed positions in Alpha Picks? What have they been like? Well, You had Super Micro, 968%. You had Modine Manufacturing. Again, these are closed positions. So these aren't part of the portfolio right now. These are closed positions because AlphaPix is a data-driven portfolio that is rules-based. And they tell you when to sell. So when to buy is a stock on the 1st and the 15th of each month. So it's super easy to follow. And I wanted to see the closed positions. Since inception, you can see AlphaPix is beating the S&P by what's that? Almost 4 times? 142% versus 48%. And these are the closed position winners. Again, 118% Sprouts. MI Homes, 228%. Super Micro is in there twice because they bought it twice and they closed it twice. They made 301% and 968% in Modine Manufacturing. There's a long list of gains there. And remember, I told you, Steve Kress said, when the market turns around, AlphaPix should outperform. It's outperforming. FYI, AlphaPix, it is up. I need to push this up. 17% versus 11.2% in the net last month. It's outperforming. So I would urge you, go over to my link tree, the second link, okay? You can get a bundle offer that saves you $159 and you get Seeking Alpha Premium. I will show you how I use Seeking Alpha Premium this morning to find a stock that's up like 250% year to date. That's what I like. But AlphaPix I love because it's just a no-brainer. I have almost $100,000 just in that portfolio. I'm not up in the portfolio because I bought in October. But because the market is down, it's a good opportunity to get in because you just saw it's outperforming the S&P on a 1-month basis. So again, you can get that portfolio, but even better if you want, there's a spring sale going on, and that is the third link, okay? And so if you're unsure if you want it, go to the third link because the third link has Seeking Alpha Premium where you save $30, but key point, you get a free 7-day trial. So the bundle, you don't get a free 7-day trial. But this spring sale that is going on right now, they give you the May 15th. The May 15th Alpha Pick. So in your free 7-day trial, you'll get the Alpha Pick. So it's a great time to look and to try that. Again, in the link tree, I just showed you reasons why. Again, you're going to do your own research, but listen to the rest of this podcast because I use these tools tremendously. TrendSpider, Seeking Alpha, and Alpha Picks all are wrapped in. It's the perfect bundle. Okay? There's a big divide between Wall Street and Main Street. Individual investors have been net buyers of equities for 21 consecutive weeks, the longest streak on record. It is more than double the previous record seen in 2021 and 2022. Again, these are individual investors, not hedge funds. Over the past 4 weeks, Bank of America's private clients have purchased a record $2 billion of equities. On the other hand, hedge funds have sold a record $1.5 billion. At the same time, Bank of America's institutional clients have dumped 2.7, the second largest amount in history. This is a much larger divergence between retail and institutional investors than during the 2022 bear market. So individuals are piling in, hedge funds are piling out. My logic around this, I think they're waiting. Hedge funds are patient and they're just waiting. Are they waiting too long? I don't know. I think the Trump administration right now is worried about the markets. But I will tell you that I also believe that there is a range bound here. And I think they wanted to get it back up to where it was on Liberation Day. And I think you'll see it start to get up. We're not even above that 200-day on the weekly. Okay? We're not even above that week, the 200-day. On the daily, you're right at the 200-day. So again, 8% up since then. It's not a bad. Have your charts ready. Know where these stocks are. Because, again, Trump, Donnie took one look at the chart, said, you better be buying into this bull flag scenario. What is a bull flag? Go and look it up. But essentially, you have this daily on the SPY and QQQ. You had these daily candles that just created a flag, and then you broke out up top. That's a bullish signal. That's a bullish signal. And Chris Camillo, who I'm a big fan of, Trump's upcoming Middle East trip and its potential impact on easing AI chip export rules to the region might be the most underappreciated NVIDIA story of the year. Is it time to buy this beaten down stock? Maybe. It has had a run. Okay? The 4-hour algorithm got you in at 106. It got you in at 109. Again, I was adding at this time. I'm an NVIDIA fan. I have my position available. This wasn't big ads for me. These were just little ads. But this is a buy and hold stock for me. Okay? And Trump administration seeks tariff reductions and rare earth concessions in China's talks. That most likely, from reports, is what's going to be brought up this weekend with China. So you have to find opportunities in the China trade. Now, is it China or is it America? I'm not sure which. I would think that China would have the bigger pop. But again, America it's just coiled, ready to go. I mean, that's what it is. So it could be Apple. Apple is under $200. It is expensive. Understand that Apple has some fundamental reasons that it's going under 200. It's growing at 4%. But it's trading at close to 30 times forward earnings. That's just too much. The 4-hour algorithm, though, it makes you 23% versus buy and hold makes you 17% over the last 2 years. That, in a normal market, 17% over 2 years is fantastic. In today's market, that's underperforming. And the algorithm just got you out, on May 6th? 3 days ago? Friday? Maybe Tuesday? They have an upcoming dividend payment, which means nothing. They don't yield a lot. But maybe it's one that gets back into the winner's circle. This has underperformed the S&P. Maybe they say, you know what? We're gonna allow Apple phones in the government stuff. Maybe they start telling their people, hey, Apple's a great company. Who knows what the Chinese will do? But Trump loves Apple. He loves Tim Apple. Maybe it's in mega cap tech. Here's Webbush saying Microsoft, Amazon, Google, Palantir are well positioned as software reaps AI benefit. Later, I'm going to go over software versus semiconductors. So maybe it's this. Or then again, maybe it's NVIDIA. Because NVIDIA is to downgrade their H20 chips for China after U.S. export restrictions. So NVIDIA's working not with, hey, let's make the administration roll this back. NVIDIA's going out and changing things. They are changing on the fly. China amounted to about 13% of NVIDIA's total sales for fiscal year January 2025. Jensen Huang visited Beijing last month to reinforce business relationships and stress the importance. Again, maybe it's NVIDIA. You've just got to look at opportunities in this market. I will tell you, an opportunity that has presented itself, and I was very, very clear about this, was IBIT. Okay, IBIT is the Bitcoin ETF that I prefer to buy. And I've been buying it this entire way down. And yes, at 47, that is a great, great short-term gain. Do you want to buy it now? I'd say maybe it's a little bit stretched. I have made my positions. But again, IBIT, Bitcoin's back over 104K. You know what? It was another great trading tool. Airlines. Here's Delta Airlines. Look at the 4-hour algorithm. Get you in at 41. Right? It makes you 113% versus 38% buy and hold. I would never buy and hold an airline. But the 4-hour algorithm, it makes it what? That's almost 4 times what you would get in the, or 3 times what you would get with buy and hold. Your average win, 30%. Look at that, from 41 to 48. This one is probably getting back up to the 200-day at 54. Now, one that I took out of the core portfolio, but I probably shouldn't because their CEO is killing it. This is a turnaround story. Boeing, orders for planes keep flowing in. You can go and read the news. And where did the 4-hour algorithm get you? In at 152. You're at 191. Okay? The 4-hour algorithm makes you 48% versus losing 5% if you bought and held this stock over the last 2 years. Your average win, 9%. That is amazing, where if you bought and held, you lost money. But if you traded this stock with a strategy, you actually wound up winning 40%, 48%. That's better than buying and holding Apple. Just to give you a sense of how good a strategy this is. Okay? I was sitting in bed this morning and I said, you know what? I want to do a screener for the listeners and for myself of stocks in Finviz. Okay? Because I have mine in Seeking Alpha, which we'll go over. We'll go over that one. But this first one in Finviz, I just pulled up the screener. I said, give me all the stocks in the S&P that are up 20% in a month, that are still priced below its 50-day SMA. Okay, it found 8 stocks. Go and look. Are there any of these that fit your risk tolerance? Are there any ones that you think pop up? Apollo, which is Blackstone we talked about yesterday. Best Buy. I've been shopping at Best Buy. Estee Lauder, that one has been beaten down. GE Healthcare, I love GE Healthcare. HPQ, maybe SMCI, all of their stuff's going over HPQ. NXPI, semiconductors, on semiconductors. Any one of those 8 tickle your fancy? Maybe. Or maybe you want one of these, okay? These are stocks. I've got this screener. It's not yet moved yet. It's in. I will include it in today's newsletter for all the Seeking Alpha subscribers. You can import it. I am still working on it. But one of the stocks that I really like is Bank of America. And Bank of America in this screener, year to date, it's down 5%. I think it's a $50 stock at $41. I was screaming earlier, you should buy this. The second half of this year, in my mind, is going to be focused on financials. The quant says it's a strong buy. Wall Street says, hey, it's got 16% upside because their price target is $48. And you can analyze it with AI. What does AI say about it? Well, in my mind, it's just too big to fail, so it's not going to 0. The valuations appear stretched with a price to earnings of 12, slightly higher than the sector median of 11. It's not outrageous. The price to book is 1-to-1, which is aligned with the sector. Growth, Bank of America shows impressive growth with 16% earnings per share year over year, significantly outperforming the median of 8%. Profitability, strong profitability. I own this one. I think my average purchase price is like 25 or something. I was buying it and I've bought and held it. I probably should have been trimming it when it got up. But I don't trade this one on a strategy. I buy when the algorithm tells me. You want to know why? Because the algorithm makes you 65%. You win 52% of the time. I like buying and holding this one. At 36, you damn well know I bought this one. So I like this screener that I created in Seeking Alpha. Again, you can use these tools to go in. Now, Webull, let me pull up my Webull account because we're in a market right now. I will just tell you, we are in a market right now where it's fun to bet. Okay, and my Webull account right now, I put $1,000 in there. It's $11,000. I would urge you, take a little bit of money, go over to my link tree, go down here, join Webull, because you can get free stocks when you put money in Webull. And maybe the stock that you want to buy is Webull. Okay? A lot of eyes on this one. Volume building near the gap fill. And that, again, the gap fill was down there. Maybe it's going back up to fill that gap again. We can pull up Webull in the 4-hour algorithm. I will tell you, it's a new SPAC. I don't like SPACs normally. And I just don't like them. You can see as it traded down here at $11, I just don't like them. But you filled the gap on the way down. It got you in at $14.94. You're at $18 right now. This is a big move down. This one went all the way up to $79. Is it worth it? I would argue no, but it's a great trading stock. Again, it's not covered by the quant, but you look at year to date, let's see, 6 month, 1 month, it's up 38%. It's not covered by the quant, but you can see the valuation. There's just no numbers because it just came out as a SPAC. For me, I would trade it based on confirmation. But I do like that it got that gap fill, and now it's in an upward trend in 1 month. And Dave yesterday, this is a stock, $2 billion. I didn't even know what they did, but it's a financial one. It was up 41% yesterday. It went absolutely nuts. Again, this one I just found for some reason on Seeking Alpha. They said they had a report yesterday, and it was this SEC filing, quarter report. And I just said, well, what's this one? 1 year, it's up 200%. Year to date, it's up 75%. Half of that was yesterday. Is it worth you putting money into? I don't know. I mean, go analyze it with AI. But the stocks are there. I was on Spaces yesterday, and I heard about a company called Couchbase. Okay? I don't know what Couchbase does. I saw on the 4-hour algorithm, I went over here, and I said, you know what? While I was listening to it, I said, let me go over here and look. Well, Couchbase on the 4-hour algorithm, I said, ooh, it just crossed its 200-day. You don't have the golden cross yet. They have their earnings coming up in June. It's a little bit stretched. I'd like to get in at 14 rather than 18, but maybe it continues this realm. And look at the 4-hour algorithm. It makes you 93% versus 20% buy and hold. Your average win 13%. So when I go over here and I look at base, what is it? Information technology. Kind of interesting. And then I went down and hear this platform for enterprises. Its database works in multiple configurations ranging from cloud to multi or hybrid, blah, blah, blah. I don't exactly know what it does, but I do know the quant says it's a hold. Why? Valuation. It's not making money. And so I would absolutely, when I see something like that, I go back to 16% year over year revenue growth. But if I see that it's not making money, I go back to TRENDSPIDER and I say, let me find a strategy that works. And the 4-hour algorithm works. So using the tools, again, in TRENDSPIDER, I use the tools of the 4-hour algorithm and strategies. You can find a technical strategy on any stock or ETF. But in Seeking Alpha, I want to look at the fundamentals. And I love using the quant system, even the Wall Street stuff. At 152, when the average price target is 155, you know, there's eight analysts that cover this one. I don't want to buy at 152. Or I'm sorry, that's Dave. Let's go to base. Base is the one that I want to look at. $20, 15% upside. Maybe I do. The valuation on base, again, they're not making money. But the growth, again, 16%, maybe I like it. But again, that's how I use my tools. Now, one of the other things that I do is I heard yesterday, hey, software's really outperforming semiconductors. And I'm not an expert, in technology. I don't exactly know software versus semiconductors. I tend to like semiconductors. Software, I like it. I do own it. I will show you. But look at this. Over 1 year, software, IGV, which is the iShares software ETF, up 23%. What's the software, the iShares semiconductor ETF? It's down 12%. 1 year. Look at that difference. Where did it start diverging? In August of last year. Because SOXX was just flat, and you can see how it just tanked this year. And software, while it tanked, it was up. And you can see year to date, IGV is actually positive, whereas semiconductors are negative. Maybe this converges a little bit. Okay, maybe with Trump rolling back some restrictions on semis, it converges, because over 3 years, that's where you get a little bit closer. IGV, which is software, is still up 86% versus the semiconductors are 48%. So maybe semis will come back. Maybe software comes down, but maybe semis come back. Over 5 years is where you get the outperformance of the semiconductors, 138% versus 97%. I'm still taking 97% in software. So what are the top holdings of these stocks? Well, I was shocked. I thought NVIDIA would be the top holding in the semiconductor one. No, it's Broadcom. It's Broadcom. And what's IGV's top holding? Let's go and look at it. It is Microsoft and Salesforce and Oracle and Palantir and ServiceNow and Adobe and Intuit and Palo Alto Networks and CrowdStrike and Strategy. Yes, MicroStrategy is in there. So again, software versus that. It's something that I just want to know. And maybe semiconductors. Remember, Taiwan Semi, the April sales surge on AI demand and rush orders amid U.S. tariffs. Maybe that's how they come back. We're going to have to wait to see NVIDIA earnings, but maybe that's how it comes back. Okay, so it's either software will continue to lead or maybe semis come back. I was in shock that the SOX top holding wasn't NVIDIA. Now, Steve Kress says, NVIDIA stock is down 21% from its peak. Is it time to buy? Well, I'll tell you, he uses the quant ratings to find 3 perhaps better alternatives. Okay? The alternatives that he gives, 2 are top 2025 stocks from Seeking Alpha, which have outperformed the market significantly, over 120% return, I think, for the past 2 years. And 1 is an alpha pick stock. Go and read this article. Again, he goes over everything in this. Is NVIDIA a good buy? He tells you why it might not be, why there might be better opportunities out there. Now, I'll tell you, I've been pumping Mercado Libre. And in yesterday's newsletter, I even told you, I even included the link to the newsletter that I wrote, turning $5,000 into $1 million. I think when I talked about Mercado Libre, there it is, 4 stocks, $5,000 to $1 million. And that was published, let me see, that was published on March 18th. Mercado Libre competitive landscape in Q1 results. This analyst says, it's time to buy. Let's look at March 18th on Melly. Where was Mercado Libre on March 18th? It was, let's see, around $2,000. The low was 1981. Where are you now? 2,400. 2,400. This, again, is a stock that could turn $5,000 into $1 million. Now, one other stock that I like, and I read this article, is Energy Transfer. Why? It's got a yield of 7.4%. I do like MPLX better. I don't own this one. But I will tell you, when I go and look up Energy Transfer, it's dipped. It has dipped down. Okay? When you look at a longer term chart, not a super long term, but when you look at February, it was trading at $20. It's now at $17. Yes, it has an entry in the 4-hour algorithm. If you're looking at buying this one, my suggestion would be to buy it under its 200-day. Why? Because I think energy comes back. And until that comes back, you've got a 7% dividend. Again, I like MPLX. We can take a look at this, and I'll just go ahead and chart ET versus MPLX. We're going to get the S&P out of there. You know what? I'm going to put in VOO. We're going to put in VOO as well, just to show you VOO. And then we're going to select metrics because you can see how MPLX actually beats over 1 year, both of them. But let's select the performance, and we're going to go total return because total return gives us the dividend, and it's even better. It's even better. This is why I like MPLX. But look, when you go out 3 years, Energy Transfer is the same. You've got 103% and 103%. And look at VOO, 48%. That's over 3 years. Now, do I expect it to continue? Maybe not, but look at 5 years and look at 10 years. Okay? VOO outperforms them in the long run. So I hold a very small position in MPLX, but I think Energy Transfer might pose an opportunity after reading that article. Now, let me take you through a process that I went through at 5 a.m. Okay, I'm going to get out of here because I'm going to show you a little bit. But first, I said, with all the Apple lawsuit stuff, I want to see if Spotify is an opportunity, because if Apple App Store it gets taken down, then I think maybe Spotify will actually benefit, because I do think Spotify is a better app than Apple Music. So if the commissions are lowered, Spotify makes more money. So I said, let me go and look at this. So I was comparing Spotify and Netflix specifically. And so I'm in this one, and I said, the valuation, Spotify is still expensive. It doesn't have a PE because they're really not making money. But if they do make money, their growth is super impressive. EBITDA growth 622%. You can see this one 1 year, it's up 119%. Year to date, it's up 46%. In a down market, this damn thing is up 46%. Now, let's go and look at Netflix, because they're similar. They're both subscriber businesses. One is movies, one is audio. Okay, and I like this one. I love Netflix. I want to buy it under $1,000, and I will be patient. I think it gets under $1,000 again. But it's just expensive. And Spotify, again, it's not making money, so I don't want to pour a ton of money in there. So I said, let me go to the communication services down here, and you'll see ranked in industry. It's number 4. Well, let me look at number 1. Okay, it led me to CuriosityStream. And for those of you that don't know, it is basically a documentary paid service. It's not huge. It's not big at all. It's got $257 million market cap. So it's not huge, but it's got a 7% yield. They're paying a dividend of 7% on a $4 stock. That's not bad. And the quant has it as a strong buy. Now, what I want to point out is that year to date, this one's up effing 192%. And they just reported earnings last night. And they had good earnings, and it's up 6%. Now, I would argue that the $5.30, that is the 52-week high, yesterday's day range was between 444 and 510, and you could have bought it at 444 right before at the close. I think that's where it was. Wall Street, there's only 2 analysts that cover this. They think it's a $5.40 stock, so it's 20% up. For me, doesn't really fit my thing. Again, I'm more into Spotify. I'm more into large cap. But this is how we found PSIX. Okay? This is the same exact thing. And using Seeking Alpha Premium, it was just the top stock. Now, PSIX over 1 year, get ready for this one. It's up 947%. We found this one when it was $4. How? You just went into top stocks and it was there. Today's top stock, Heritage Insurance Company. Okay? It's a $761 million stock. And if you go and look at the strong buy, when did it become a strong buy? Here at $14. It's trading at $25 right now. And that was just a month ago on April 7th. So how do you use Seeking Alpha? You use it in this way. Again, you find these stocks. Do you go in and you YOLO these things? No. But PSIX was one that went from $4 when we found it to $40 freaking dollars. Today it's trading at $30. It's up 9%. You want to know why? They had earnings last night. Super good earnings. It's up 9% in the pre-market when it was up 7% yesterday. It was up 15% when I saw it this morning. So again, you want to find those stocks. Now I'm going to tell you about Trading Desk, because Trading Desk outlines Kokai adoption and Q2 revenue guidance. You may say, well, I don't even know what that is, but I will show you. And I always say this, gaps get filled. Well, we saw this huge loss from last Trading Desk earnings, okay? My dad owns a bunch of this. We held through this downturn. My dad was like, why didn't we sell half of that? Why didn't we use our portfolio management skills to actually trim this one when it was up at $120? Why didn't we do this? We didn't. We held through this. He was negative when it got down here to 52. The decision was decided we're not going to add more, but maybe we will. And when will we? As it starts to move up and gain confirmation. And that's what it's doing today. It is up at 68. It's up 14%. Is that too much? Based on the earnings, probably not. Because I think this one pumps a little bit more. Now, am I going to add to a position? Not until the quant tells me. And so I'm going to set an alert, okay? When the quant tells me that it's moving, you will receive an alert anytime the selected range rating changes. And I'm going to get it on email and on mobile. And so when the quant changes, and it might be later today, based on the earnings, it might be, next week. But I'm just setting that. And I know that the $52 right here should have been a buy because we're at $68. It should have been. But the 4-hour algorithm doesn't work on this stock. You can see it loses you 18% versus buy and hold loses you 6%. You win 58% of the time, though. That's the crazy thing. 24 positions, but these downturns, these big swings down have taken you down. Your average win 7%. Your average loss 10%. Over 24 months, there are 24 positions. So again, you win 58% of the time, but you lose a lot when you stay in there. So I want to find a way to get back to this gap. And I think it goes back to that gap. Okay. This earnings of Trading Desk was absolutely correlated to Magnite, which is MGNI. Magnite shot up on earnings. Look at that, 19%. That should have been a signal. Trading Desk is going to go up. AppLovin, another advertiser, shot up, was up 11% after earnings. Trading Desk, same thing. Same thing. And you want to know another one that's Pinterest. Pinterest is up 11%. Okay, and another stock, I told you about Melly, $5,000 into $1 million. Another one is Transmedics. And this one is up 18% in pre-market. And they killed it. And then Cloudflare, like I told you yesterday, I like this stock. It's up 10%. Cloudflare killed it. Now, SoundHound, they didn't kill it. They're only down 1%. It was bad earnings, but I've said it before. When you look at SoundHound, they have a great business plan. The problem is when you go into their earnings, they're not making money. Go to their valuation. They don't have a PE. They don't have a PEG ratio. Their growth is impressive. But when you look at what they're actually making, it's $84 million. Okay? And they have almost a $4 billion market cap. Short interest, 32%. On good earnings, this would have spiked like Hims because it would have been caught in a short squeeze. So you've got to know where you're looking at and what stocks you're looking at. Now, Coinbase, I was shocked. Shocked. I mean, Bitcoin's at 104,000. Yes, we saw Bitcoin turn down during the first quarter. But Coinbase, Q1 profit falls short as crypto volatility dents trading volume. Nobody wanted to trade it. Why weren't people buying this thing? I don't understand it. Is Coinbase a buy? For me, it's just too expensive. You know, Wall Street says it's what, $259? You're trading at $204. It's a 25% upside. But when you go and you look at the valuation, it's trading at 28 times forward earnings. The PEG ratio, because the growth is so good. Revenue growth, 115% year over year. So for me, I'd probably trade this if I wanted to on a strategy. And look, the 4-hour algorithm makes you 312%. I'm perfectly happy with that. You know, I don't need the 322%. If I even come close to buy and hold, I have the protection of knowing it gets me out during these volatile times. Not on trading desk, but on this one, historically over 2 years, I've been okay. And it gives me some safety to sleep at night. Now, we have you got a ton of news this weekend. I mean, you've got the China talks. You're probably going to get tweets. But there's huge earnings next week. You got Monday. You got Rigetti. You've got SC. You've got Seagate. You've got Anon. You've got JD. You've got Cyber. You've got Oklo. You've got Globe. You've got Walmart. You got Dollar Tree. You got Cisco. You got Baba. You got Applied Materials, Kava. You can find it all on Earnings Hub. Okay? Earnings Hub is where I go. I need to sign in. I guess it signed me out. But Earnings Hub is where I go to check out what's coming up next week. And I just look at the calendar and I say, are there any ones that Hertz? You know, Ackman bought into Hertz. Rigetti Computers. You got Archer Aviation. You got Berkshire Hathaway, which, you know, we heard Berkshire. You got Under Armour. You got Lunar. Again, Global eLife. Walmart, Baba, Deere, Kava, Applied Materials, Take Two. So you've got plenty of additional bonus catalysts next week. If you have any questions, again, there's 4 stocks that could turn 5,000 into 1 million. It's on my right here. dailystockpick.substack.com. You've also got, you know, everything's at the link tree. Again, sign up for Webull. I think we're in one of those markets where you can turn $1,000 into 11,000. You've just got to have the right opportunities. You could lose $1,000 as well with a tweet. I mean, it's up and down. The fear and greed index, be very careful about buying right now because I do think that we're a little bit stretched. I wouldn't buy on a Friday, but again, if you're trying to play something, go and play something. Again, TrendSpider, get the 2-week trial, look for the Liberation Day strategy, try the 4-hour algorithm. It's all good stuff. But if you have any questions, hit me up. I will talk to you Monday. Have a great weekend. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.